Welcome back. In Libya, the National Oil Corporation, said Libya oil production has reached 700,000 barrels per day, recovering from a drop earlier this month caused by fighting at two key oil ports. The NOC chairman, Mustafa Sanala, says the corporation is working very hard to reach 800,000 barrels by the end of April 2017 and hopes to reach 1.1 million barrels next August. In the meantime, oil prices recovered today from losses chalked up the session before, but the market remained under pressure as bloated U.S. crude inventories and rising output dampened OPEC-led efforts to curb global production. Let's look at the oil market as well as the burning economic issues here in Nigeria as it affects domestic commodities. Damilare Adeshola, research analyst at Financial Derivatives Company, joins me now. Good afternoon, Damilare. So what are the reasons for the current trends in the oil market, and should we expect them to continue?
So as you mentioned, the bloated US stock. So we've seen that last week they have increased at an unprecedented rate of 4%. At least these barrels last week it increased by 5 million. So this is also a 100% increase. So it's this continuous increase because price recovery is encouraging U.S. producers to keep producing. So because of this, we've seen almost an offset of the gains of the production cuts that started at the beginning of the year. So if this continues, if the U.S. continues to pump the market with supply, we might continue to see oil prices stay at this current level of 50 or even go down a little bit more, because as you said, it did go down in intraday trading. It went down to about 48 at some point. So if we see that the US continues to pump the market with their oil, then the prices will stay as it is.
Now, what are the implications of the oil market outlook as it is now on Nigeria, given that the central bank is targeting a $40 billion external reserves?
Yes, so the low oil prices obviously connote low forex earnings, and it's these forex earnings that contribute to the external reserves. So while this is a threat for the target, as you mentioned, 40 billion target, at the same time it gives room for the oil production to step in. As you may know, Nigeria is actually more production sensitive than it is price sensitive. So right now we're at about a production level of, I think, 1.6. So if this is increased and this is boosted, then we might see that the losses of price might be recovered in the form of oil production. So our revenue might stay the same or even increase. So it's up to the level of production and whether this can be boosted to 1.8 or even 2 million, 2.2. And then that would now determine how much effect it would have on the external reserves.
All right, let's look at other burning issues in Nigeria's economy. Nigeria intends to raise an additional $500 million in Eurobond markets. How will these and other borrowing plans impact the Naira?
And really, when you look at it, if you want to look at it in isolation, we initially raised 1 billion in the Eurobond markets. As you said, we want to raise an additional 500 million. The diaspora bond is 300 million. All of this is only 1.8. And as a percentage of the current external reserves, it's at about 3%. The current external reserves is about 30.5 right now, so it's only about 3%. But at the same time, it's these little drops that make the difference. And so this combined with the oil receipts, the inflow from the oil receipts will contribute to forex inflows and would also actually send a signal, because what this does is it sends a signal and it boosts that shows that investor confidence is actually gaining momentum. So while it will send the inflow, it will send a signal, it would also encourage portfolio investments and all those things. So in the long run, we would see that as it contributes to forex inflows and also encourages S&P confirmed our rating at B. So all of this is showing that investor confidence for Nigeria is actually still strong despite the economic challenges. So what we can expect to see is that there will be an increase in the forex earnings as well, and it also assists the CBN in their efforts to supply the forex market and keep the Naira at a particular level.
Okay, well, we've seen that the forex market appears to be strengthening. How good is this news for the domestic commodities market?
Well, it's definitely good news for the domestic commodity market because especially for exchange rate sensitive commodities like flour, palm oil, sugar, rice, we find that palm oil is actually one of the 41 items that were banned. So producers would have, the cost of importation for producers would be less because the parallel market rate actually dropped significantly over the past few weeks. So what we would find is that they will be translated into cheaper prices and ease the burdens on consumers. And in the long run, if this is maintained, it could have an impact on inflation because all these commodities are actually weighted in the food index, which is part of the inflation index. So if we find that the food index dropped, actually in the last figures, food index was the only index to actually rise, while all the other ones fell. So if you can see a reversal of these trends, if the domestic commodity prices come down. And so in the long run, it could have an impact on inflation. But it's good to bear in mind that there's a time lag between all these things, and it's not going to happen tomorrow, but it'll take time.
Well, it's sustainability of the trend in the forex market also matters in this case. Anyway, thank you very much for your time, Damilare. Damilare Adeshola, research analyst with Financial Derivatives Company. We move over now to Malawi. The winemakers there are seeking to expand their businesses further after tasting success at home. Linga fruit wines are produced from 8 types of fruits locally grown by smallholder farmers in Malawi. The brand has grown popular at home over the years and has now found its market in the United Kingdom with prospects. The demand could grow to other countries in the future.
When Timothy Ingwira started building his wine business in 2006, a long-awaited dream was finally starting to take shape. Ingwira, who only processed wine as a hobby at first, says he was determined to go into commercial production one day. Today, Ingwira is a managing partner at Linga Fruit Wines, a family business based in Malawi's capital.
This is our main seller, where we put wine that is to be stored for a longer time, usually from 1 year up to 5 years.
A biochemist by profession, Ingwira was introduced to winemaking in the 70s by a missionary. He says he made wines on a small scale over the years that were well received by colleagues and friends. After conducting thorough research, he decided to start commercial production 11 years ago. Linga now produces wine from 8 fruits grown in the country. The wines range from rosellas to fruity white wines. The wines are naturally fermented for years to achieve a unique, smooth taste.
For lovers of wine, try Malawi wine. That's it on the program. Thank you very much for watching. I'm Chimeze Obi-Wagu.
But we have now convinced the system